The crypto buying surge just hit a 2x momentum spike and institutional money is pouring in at levels we haven't seen since the 2021 bull run. If you're not paying attention to what's happening right now, you're missing the biggest opportunity setup of 2024. The data is screaming at us. Google searches for by crypto have doubled in the past month. Coinbase reported their highest new user signups since March 2021, and here's the kicker: institutional inflows just hit $2.1 billion in a single week. That's not retail FOMO, that's smart money positioning for something big. In the next few minutes, I'm going to break down exactly what's driving this surge, why the timing is critical, and most importantly, how you can position yourself before the masses catch on. We'll cover the specific metrics that matter, the coins getting the most institutional attention, and the 3 strategies that could maximize your gains in this cycle. Let's start with the institutional data that most people are completely ignoring. Grayscale's Bitcoin Trust saw $890 million in inflows last week alone. That's the highest weekly inflow since January 2021, right before Bitcoin hit its all-time high. But here's what's different this time: it's not just Bitcoin. Ethereum institutional products pulled in $340 million, Solana saw $89 million, and even Chainlink grabbed $23 million in institutional money. This isn't random. Institutions don't throw billions around without serious conviction about where the market is headed. The Coinbase data tells an even more compelling story. New account registrations are up 180% month over month, but here's the key detail: the average first deposit is $2,400. That's not kids throwing lunch money at meme coins. That's serious money from people who've been waiting on the sidelines. Crypto trading volumes across all major exchanges hit $1.2 trillion last month. To put that in perspective, that's higher than the entire market cap of most traditional asset classes. The liquidity is there, the infrastructure is there, and now the institutional adoption is accelerating. But volume spikes can be misleading, so let's look at what really matters: on-chain metrics. Bitcoin's network hash rate just hit an all-time high of 755 exahashes per second. When miners are this confident in Bitcoin's future price, they're literally betting millions of dollars in equipment on it. Ethereum's daily active addresses are up 34% in the past month, sitting at 1.2 million unique addresses. That's not speculative trading, that's actual usage. Real people and businesses are building and transacting on these networks at unprecedented levels. Now here's where it gets really interesting. If you're finding this data valuable and you want to stay ahead of these market moves, smash that like button right now. It actually helps more people discover this content when the algorithm sees that engagement. The traditional markets are setting up perfectly for crypto's next major move. The dollar index is showing weakness, sitting at 104.2 after hitting 106 just 2 weeks ago. Historically, when the dollar weakens, alternative assets like crypto see massive inflows. Gold just broke through $2,100 resistance, which typically signals that investors are moving into inflation hedges. Bitcoin has been tracking gold's movements with an 83% correlation over the past 60 days. When gold moves, Bitcoin follows, but with much bigger percentage gains. The Federal Reserve's latest meeting minutes revealed something crucial that mainstream media buried on page 47. 3 Fed officials are now concerned about deflation, not inflation. That means rate cuts are coming sooner than expected, and when rates drop, risk assets like crypto explode higher. We saw this exact pattern in 2019 when the Fed pivoted dovish. Bitcoin went from $3,200 to $69,000 in less than 2 years. The setup is eerily similar right now. Corporate adoption is accelerating at breakneck speed. Tesla still holds 9,720 Bitcoin worth $630 million. MicroStrategy just bought another 3,000 Bitcoin, bringing their total to 174,530 coins. But the real catalyst is coming from an unexpected source. Pension funds and endowments are quietly allocating to crypto. The Ontario Teachers' Pension Plan, managing $247 billion in assets, just announced a 2% allocation to digital assets. When pension funds move, it's not speculation, it's a 30-year investment thesis. The University of Michigan's endowment fund allocated $10 million to a crypto index fund last month. Harvard's endowment has been quietly accumulating through various crypto funds since 2021. This is patient capital with long-term conviction. Fun fact: 80% of you watching this aren't subscribed to the channel. If you want to catch these opportunities before they become mainstream news, hit that subscribe button right now. I break down these institutional moves every week before they hit the headlines. So what does this mean for your portfolio? The institutional playbook is actually pretty simple, and you can copy it exactly. The smart money isn't going all in on anything. They're building positions over time with dollar-cost averaging strategies. Here's the specific allocation model that pension funds are using: 60% Bitcoin, 25% Ethereum, 10% in Layer 1 alternatives like Solana and Avalanche, and 5% in DeFi blue chips. That's not financial advice, but it's exactly what billion-dollar institutions are doing right now. The timing matters more than most people realize. We're in what I call the institutional accumulation phase. Retail investors are still skeptical after the 2022 crash, but institutions are quietly building massive positions. This is exactly what happened in early 2020 before the 2021 bull run. Bitcoin dominance is sitting at 52.8%, which historically marks the beginning of alt season. When Bitcoin establishes a strong foundation, altcoins typically see 3-5x larger percentage gains. Ethereum, Solana, and other major alts are coiled springs waiting for Bitcoin to make its next major move. The regulatory environment is finally clearing up. The SEC just approved spot Bitcoin ETFs, and Ethereum ETFs are likely coming in Q2 2024. When traditional financial advisors can finally recommend crypto through familiar investment vehicles, we'll see another massive influx of capital. BlackRock's Bitcoin ETF already has $15 billion in assets under management. Fidelity's fund hit $8 billion. These aren't speculative vehicles, they're pension fund approved, institutional grade investment products. Now here's your action plan. First, if you're not already in crypto, start with dollar cost averaging into Bitcoin and Ethereum. Don't try to time the bottom. Institutions aren't waiting for the perfect entry, and neither should you. Second, use reputable exchanges like Coinbase, Binance, or Kraken. The infrastructure has matured dramatically since 2021. These platforms now have insurance, regulatory compliance, and institutional-grade security. Third, think in years, not months. The institutional money flooding in right now isn't looking for quick flips. They're positioning for the next major economic cycle. If you're trading in and out trying to catch every move, you'll likely miss the big one. The macro setup is perfect. Institutional adoption is accelerating. Regulatory clarity is improving. And retail interest is just starting to wake up. The question isn't whether crypto will have another major bull run, it's whether you'll be positioned for it when it happens. Drop your thoughts in the comments below. Are you buying this dip, or waiting for lower prices? I read every single comment and often feature the best insights in future videos. Your perspective might help thousands of other viewers make better decisions. If you want to see my detailed analysis of which specific altcoins institutions are accumulating, check out the video I just posted yesterday. I break down the exact coins that billion-dollar funds are quietly building positions in, and some of them will surprise you. The link is in the description, but YouTube's algorithm will also recommend it. Right after this video ends.